Everybody, I'm Jer. Welcome to my YouTube. All right, so I'm seeing that Society Pass, SOPA, SOPA, is up like 280%. So of course it made me want to look into it. What's going on? Let me pull this up with you. All right, Society Pass, they're at 1245. They're up 276%, 277% right now. Day range 444 to 1348. Okay. Previous close was 331. They are added to the Russell 2000 index, so that's why they are going up, I suppose. Let's look at revenue. So let's see. December 2020, they did 2,777 or 770 in revenue, down 73% year over year. They lost 1.3 million. Net profit margin was negative 47,000%. Okay, March of 2021, they did 9,000 in revenue, 9,500-ish, down 44% year over year. Net income, they lost 2,760,000. Net profit margin, negative 29,000%. Operating income, negative 1.99. Okay. Revenue for the period ending June 2021 was 7,780. They lost 4.34 million. Year over year change of 1,105%. Net profit margin, negative 55,797%. Operating income, they lost 4,320,000. Okay. September, they did 85,000. Period ending September, 85,530, 618% increase. Their net income, they lost 8,430,000, 418% decrease. Net profit margin was negative 10,000, 90%. Operating income, they lost 8.42 million. Okay. All right. So let's look at this. This is their registration of securities, their prospectus. Okay. Common stock registered was 29 million. A total of 31 million shares. Okay. And let's go down here. Risk factors. We have a limited operating history and evolving industry, which makes it difficult to evaluate our future prospectus, our future prospects, and may increase the risk that we will not be successful. If we fail to raise capital when needed, it will have a material adverse effect on the company's business, financial condition, and result of operations. We rely on internet search engines, application marketplace to drive traffic to our platform, certain providers of which offer products and services that compete directly with our products. If links to our application's website are not displayed prominently, traffic to our platform could decline and our business would be adversely affected. The e-commerce market is highly competitive, and if the company does not have sufficient resources to maintain research and development, marketing, sales, and client support efforts on a competitive basis, our business could be adversely affected. Delays in... Okay. You can read it. All right, so something good though. Okay, so they are a controlled company. Upon the completion of the offer, Mr. Dennis Niguin, I don't know how to pronounce that, I'm sorry, our founder and chairman, chief executive officer, will beneficially own voting stock that provides him with approximately 72% of the voting power. As long as our officers and directors either individually or aggregate own at least 50% of the voting power of the company, we are a controlled company. So it's an exemption to the rule that majority of the board of directors must be independent directors. An exemption to the rule of compensation of our chief executive officer must be determined or recommended solely by independent directors. An exemption to the rule that our director nominees must be selected or recommended solely by independent directors. Okay, so basically they get around rules that are set forth by NASDAQ because they own more than 50% of the company. Okay, common stock outstanding is 11,640,000 shares. Total of 28 million. 21 million shares if the underwriter exercises their option for purchase additional shares in full. They have 45-day option to purchase. This was done in October, but so I would imagine that 45 days has already passed. The stock came available at $9 a share whenever they did their IPO. Okay, so risk factors, lockup agreements. Our executive officers and directors and any holder of 5% or more of outstanding shares of common stock of the company have agreed with the underwriters not to sell, transfer, or dispose any shares similar to securities for 180 days following the effective date for registration statement for this offering. For additional information regarding our agreement with the underwriters, please see underwriting. Okay, so the good thing about this is that at least it looks like 72%. (72% is owned by the founder, chairman, and chief executive officer, CEO. So 72% of the shares are locked up. The problem here is going back to this and seeing the fundamentals, the financials for this company. I mean, this is great. $83,000 and a 618% increase is great, but you have a market cap of 63.49 million. Let me see what it's showing on Webull. On Webull, market cap is 226 million. So 226 million. If we're doing the math on that, let's see here. 83,000 in revenue. Just doing some quick math. 83.5 thousand. 7.78 thousand. So 7.8 is what we'll call it. 9.5 and 2.7. 2, 5, 12, 14, 23. excuse me. So for the last 4 quarters, they did 103,000. They are trading. If Webull is correct, looking at Webull right now, it shows them at 222 million market cap. So do 222 million divided by 103. That can't be correct. Is that correct? They are currently trading at 2,149 times revenue. Yeah, let me times that. Times 103. Yeah. 2,000,000 100 and wow. Okay. 100. Yeah, 2,000. They're trading at rev. So 2,149 times rev. So right now, based off of what they made in the last 4 quarters, and off of what Webull is showing their market cap at currently, let me look at Robinhood, see if yeah, Robinhood shows the same, 222 million. Okay, I don't know what they have planned to make their revenue go up. Plus, they are losing $1 million there, 2 million there, 4 million there, 8 million there. To be able to get this amount of revenue, I don't see that as being sustainable. Maybe I'm wrong. Maybe there's something I don't see. Yes, it's great news that they're being added to apparently they own this website, the Left Flare. I've never heard of it. It looks decent. Okay. This is their most recent financial statement. They have total assets of 11 million. Okay, so I was looking and I was like, well, what does it take to be a part of the S&P 2000? Well, S&P 2000 is just basically the Russell 2000 index created in 1984 by FTSE. Russell is a stock market index comprised of 2,000 small capitalization companies. It's made up of bottom 2/3 of Russell 3000 index, a larger index of 3,000 publicly traded companies that represent nearly 97% of investable stock market. So I don't understand, it's great, yes, and this is news, yes, but should it send a company that made $103,000 over the last 4 quarters to a $222 million market cap? The answer is no, but it's tradable. I just think it's very risky tradable. to me, it's very risky tradable. And yes, there's a lockup period that goes until April. That 72%, or however much it was, of the stock is locked up. But also, I believe that they can do an offering. So at the close of today, they could be like, okay, we're going to do an offering. We want to offer 20 million more shares at this price, and then take the money. So it's very risky. I don't know if they would do that, but it's not something I would be willing to take a chance on. And me personally, unless they have something that's showing catalysts that is going to make them, which I'm not seeing anything, but maybe they do have, unless they have something that's showing catalysts that's going to make them raise their revenue an extreme amount above this 103,000, I am avoiding this stock. I'm not shorting it, and if you want to short it, you can. And I imagine there's going to be a lot of shorts, and then with a lot of shorts come people that want to do a short squeeze and ends up pushing the stock even higher up and all of that. But that's not something I want to be involved in. You can be if you want to be, but I do not want to be. So personally, I'm not your financial advisor. I always say that, but if you want to get into it, but realize that there's a lot of risk with this, especially considering they only made $103,000 over the last 4 quarters, and they're trading at $222 million. I wish that a company that I do like, Waiter, was trading at $222 million, and they're a legitimate company with millions upon millions of dollars in revenue, and they make profit, and so and I'm sure there's a lot of companies like that. So I think Society Pass is avoidable. The reason it's shooting up so much is just because it is so low float, because so much of the shares are locked up until April. So we'll probably see this bouncing around a lot until April. But I would say it probably belongs closer to what it was than what it is now. So, but that's just my opinion. You can do what you wish with that. I'm avoiding it for good reason. Okay, that's all I have right now. Maybe there's something else here that I'm missing. I don't know. If you haven't yet, be sure to subscribe, and I'll give my opinions on other stocks as we go along. Subscribe and like this video, and that's all I got. Love you all so much, and I'll see you very soon. Bye.